Hello, everyone, and a very warm welcome, as usual, to today's Major Markets Update for December 1st, 2023. It is the last month of the year already. November 30th, I always think like, oh, it's going to take a long time before we get to the next year. Come December 1st, I all of a sudden go like, oh my God, it's almost Christmas. And yes, December always has this like inevitable ring to it, at least for me. And what's going on in the markets? Are we experiencing a blow off top? Fifth waves are often hallmarked by barely any subdivision in the waves. We constantly anticipate a larger pullback, and it is just not coming. The largest pullback we've had so far on the S&P 500 was 1.4% on November 9th. That was it. Meanwhile, sentiment is extremely bullish, more bullish or as bullish as I believe January something 2018. That's pretty much a couple of weeks before there was a 25% correction. Okay. Also, market breadth is extremely stretched to the upside. And as you can see, sentiment and market breadth and all those things be damned, price is the final arbiter. And if the bears cannot even get price below, I believe, 45.39 it was, then we go higher. And yesterday, I already told folks that we have reached the ideal target zone for most of the indexes, and that we therefore have a low risk buying opportunity. Okay. And that's what we certainly got, especially for the S&P 500. Now, the Dow Jones is a completely different wave count. The semiconductors dipped today even better. I'll show you that. The NASDAQ did picture perfect. I'll show you that. The rally so far in the semiconductors and the NASDAQ 100 is a little bit behind the curve, but remember, we can have always a lot of switching going on. When the Dow Jones gives up, then we might see some money flow towards other indexes. All right, let's see here. We go straight to the charts. So let me start off with, hey, where did it go? Yes, with this chart from the regular NASDAQ. Okay, we have had a upside target here between ideally 14,631 and 15,120. Remember already back in October, we said as long as this, well, in the other case, S&P 500, 14,100 holds, we can see a rally to 4,300, 4,500, potentially 4,800, 5,000. Okay. Now, look where we are, getting awfully close to this upside target. I think we're going to get there. As long as you, of course, hold certain price levels. I think we're going to get there. Now, this is, I think, a chart we should really keep close and dear to our chest, because it might mean that we won't see S&P 5,000 or S&P even 4,800, which a lot of people think we're going to get to. I'll get to there in a moment. And then maybe 4650, 4750 or something like that is all we're going to see for this market. Remember, the market is designed to trick the most. Even the stoutest and best of analysts can get it wrong. And if we're all starting to look for a certain upside target, a consensus, it often appears that we're not going to get there. Also here, this is classic so far, fifth wave. We knew we were in the fifth wave already. Now, is this a C wave or a third wave to be determined? But I must admit, this rally here from October into December is very hard to count as 5 waves higher. I cannot even make it into a diagonal. I have a very down 1, 2, 3, 4, 5. It even not has any diagonal pattern to it. I cannot morph this into a diagonal. It needs to look like a diagonal and not just trying to force fit something. So then the third wave count remains this wave C. Even if we're going to get a fourth wave, remember that fourth wave is going to be even bigger than the summer correction we had. So, you know, buyer beware. Okay, buyer beware. And remember, a lot of people will also say, we had a thrust event, so the market won't go low. But I shared with you that in many cases, after a thrust event, there was still upside left. And in some cases, you would either then see a pretty decent correction or even go below the low from where the thrust event started. Since 1940s, it has happened several times. So yes, we can go back below the October lows, okay? One step at a time. And remember, if this is a B wave, it can become immensely complex. This might just be A of B. We're going to get B of B and then C of B. It might be the case, okay? That is to be determined. I cannot foresee the future. I cannot predict the future, but please keep it in mind. If we are indeed in a B wave of a super cycle 4 wave, okay, or cycle 4 wave, depending on your labeling, things can get extremely complex. That is the hallmark of a 4th wave, okay? It's not been an easy market environment since November 2021, not at all. So this is then simply based Fibonacci target zones and on a little more zoomed out perspective. If we then zoom in, we can see yesterday how picture perfect the NASDAQ reached the lower end of the ideal 4th wave target zone with, in my humble opinion, an A, a B, and a C, okay? This is then a irregular expanded flat where C is larger than B, which is larger than A. Picture perfect. So I think we can now say, okay, this was wave 5, take that one away. This was wave 5, and then this was wave 3. I need to reduce sometimes labeling. This one that was wave 4. So simply put, as long as we stay above yesterday's high, we can move higher. We just need to go above 14,350 and off to the races. So this is why I said yesterday, we have a low risk buying opportunity, and we know the levels to watch below which things can go haywire. In this case, 14,000. Well, we didn't even reach 14,000. If you didn't make any money, if you're a shorter term trader on this one, I don't know what to tell you. Okay, this was a slam dunk in my humble opinion. I squeezed out about $2,000 today, so I'm pretty happy. Don't tell the IRS. Anyway, so this is what we're going to look for. So if we then get this wave 5 of 5, we have an ideal target here of about 14,810, 14,940. It matches really nicely with what we're seeing here. So we're getting very close to the 76.4% retrace. And we remember we're still below the November 2021 all-time high. So we still have not proven that this is a bull market. Anybody who says this is a bull market is wrong, because in my humble opinion, bull markets are hallmarked by new all-time highs. Until then, we're just dealing with a 5th wave. And 5th wave, as I said, barely subdivided. That is kind of the hallmark of a 5th wave. Look here, for example, this rally here, okay? From, I would say, the September low of 2021 to here. Essentially just straight up. Just straight up, we had a couple of days of a pullback, a rally, a couple of days of pullback, rally, and that was it. Does it feel the same? Sure does. Okay, that was a 5th of a 5th wave, in my humble opinion. Just straight up. I can show you more examples, but this looks pretty darn the same. All right, moving on to the NASDAQ 100. Also here, we bottomed right in the ideal 4th wave target zone. Strong reversal, and I think we're going to want to set up on this one. Remember, lots of negative divergence, and nothing goes up forever. Definitely not in the stock market. So we're going to place the wave 4 label here. And we should now be looking for this wave 5, anywhere between 16,300 and I would say 16,600. All right, that I think seems to be a pretty reasonable target. So that was a little too high, so we're going to adjust it to 16,620, somewhere right there. Okay, so that one a little bit, something like this. So we have nice confluence for this wave 5 target. So again, is this C of B or is it only 3? And we're going to get a pretty large 4th wave, all right, to here, and then a 5th wave. I must say, other folks I follow for our third opinion are all looking for this larger pullback. It's just not coming, which tells me this is a 5th of a 5th wave. So, okay, so we completed 3, 4, and 5 for this one. I like it. I'm going to take this one off the chart, clean it up nicely, and we should now be in this wave 5 of 5 of C of 3, which ideally should top out somewhere around December 7 to December 10. Okay, and also here, remember, this is going to be then a 2,000 to 3,000 point decline. This here, the summer decline was about 1,000 2,000 point decline. So even if we get a 4 and a 5, just remember it could be a B wave. So Only pigs get slaughtered. If you are just saying that's going to go higher regardless, please be my guest. I don't see it yet. Okay, so those are the tech sectors. And I think the tech sector is a very good canary in the coal mine. And this rally we've had so far over the last month is not going to continue forever. The ebbs and flows of the market, or ebbs and floods of the market, must continue, and they will. So alternatively, as I said, we've bought or topped already for this wave 5 yesterday, and we're in this 2 and then 3. Okay, so far we're right in this wave 2 target zone. We need to break above yesterday's high to confirm the wave 5, which we're already in for the S&P 500. So technology again could have already topped. It could have technically, right? From an hourly perspective, there are enough scribbles in place. Then I will have to place the wave 4 here and then the wave 5 there. It would be very short, very brief. I don't like it, again, because this rally is much better counted as 1, 2, 3 waves up. But maybe they snuck something in that I don't know. I've seen it before. So that is the alternative. The primary wave count remains as long as we hold above yesterday's low, we can move higher. Okay, so this still looks good. Even if you bought yesterday, it'd still be up. Even if you bought the close yesterday, it'd still be up. And your stops were not hit. So these are the 2 alternatives for tracking. Preferred, alternative. Dow Jones, what a blast off move. We already covered what it wasn't. Okay, here it also shows divergence is only divergence till it's not. Okay, we had divergence, it's all being erased. So we're now in this wave 3. In my humble opinion, we should see a 4 and a 5. The wave 3 target zone has already been reached, so we can actually ratchet it up a little bit better. So let's see here. There we go. Something like this. We have now reached 123.6% extension. This was then not a 1, 2, 3, 4, 5, but somehow probably a very subdividing 1, 2, 1, 2, 1, 2, 1, 2. So we're really subdividing. So, oh, sorry, we'll just let this one subdivide the crap out of itself, but we should now be in a blow-off top. I wanted to mention, and I'm not going to show it here, I'm just going to pull up my Twitter feed on my phone, that see here, Ryan Detrick tweeted that the Dow Jones is now up 5 weeks in a row for the first time in 2 years. Returns after these long win streaks don't appear to be bearish, but they're not overwhelmingly bullish either. All right, so he's done a comparison since 1990, at least according to the chart. Well, the Dow Jones has been around 100 years longer, so we could extend that comparison with a decent data set. He finds that based on historical patterns, it is then higher a year later for 80% of the time, with only an 11.5% gain. So from this level, based on historical patterns, we are higher a year later, 80% of the time, but only 11%. So please give that a thought. So indeed, we're getting very extended. And again, also here, you see we have no pullback. So this is the biggest pullback we had in the Dow Jones, this one. Okay, this is all we got. This is, in my humble opinion, the hallmark of a 5th wave. Absolutely. I have a hard time. So this would then be 5 of C of P. Okay, and P can become irregular. The all-time high can still be reached for the Dow Jones, and it's just an irregular B wave, just as we had a irregular B wave potentially here. Okay, if the 3rd wave doesn't do it, then the B wave will do the trick. Again, we have not had more for the Dow Jones than about, let's see here, how many points of a pullback? 400 points. That's it. 400 points on 30,000 plus. It's nothing, right? So we haven't had any pullbacks, and all this non-subdividing, say, crap, but waves are very difficult to track. So when you think like, okay, we've reached these standard Fibonacci-based upside targets, not that one, I don't know, stock charts always gives me that stupid Fib fan that nobody uses. I don't see any use in it, but oh well. And as you can see here, we reached the 3rd wave, the 4th wave, and look at this massive extension. Massive extension. I can't wait for the sentiment readings next week. It's going to be off the charts. But again, price is the final arbiter, and the Dow Jones needs to drop below 35,275. I constantly said it. If we don't, we can move higher, and it is higher, a lot higher than I originally anticipated. But again, I cannot forecast extended waves. So here we go. We're now at 36,225-ish already. Not too bad. We're there, okay? But we can easily go all the way to 36,000, almost 37,000, okay? Somewhere around there. This can blow off. This is typical blow off. I don't know what to call it otherwise, all right? So please be aware. As I said before, it's not a bad idea to take partial profits, register up your stops, okay? There's only two types of traders, those that can trade and those that cannot trade. You cannot trade a little bit. You either trade well or you don't trade well. That's it. There is no difference. That said, moving on to the semiconductors, look where that one bottomed today. Picture perfect, right at the upper end of this ideal wave 4 target zone here in blue. Can't nail it any better than this, all right? Wonderful. So the ideal was around, I believe, 36.75. We got it. And I think that's actually what I mentioned in yesterday's update. Let me pull that one up for you. Let's see if I can find it. Yesterday's update. Semiconductors. All right. I said yesterday's low would be the low for the ABC. All right. So that one was off. I must then correct it. But I said above 3,800 will confirm the red wave 5. Below the lower end of the ideal blue wave target zone is where wave 4 can be questioned. So again, there is a pretty decent risk reward because the risk was 3,600. So I thought that I mentioned for the semiconductor slow would be in. It's not, but again, we can see from a Fibonacci perspective, this is picture perfect. Looks pretty decent and strong. I would like to see above 3,800 and target 39.25, 39.80. Okay. Alternative, this is still part of a larger corrective move lower, and that we've topped out for this wave 2. But given where the other indexes are, it seems so far that the 4-5 setup is in place. But that's why we have this 3,600 as a cutoff. That is the risk. Because if that's the risk, 3,600, you don't want to sit through it going all the way down to the low 2000s. Right? So if you can cut your losses at 3,600 and prevent running it all the way down to 2,600, that's the power of trading. That's the power of Elliott Wave that most people don't get because they don't understand risk management. Then we're able to short it instead and make money instead of hanging on, get completely nauseous, stomach ulcers, headaches, start kicking and screaming, sleeping badly because you're losing money. All right, that's the power of the Elliott Wave. That's why we say the risk is there. Be careful if it goes below 3,600 because it can go to 2,600. Good luck sitting through that one. I would. Anyway, moving on to the S&P 500. It's Friday, so we can rant a little bit. Anyway, we bottomed again, like I said yesterday. Picture perfectly on the top of this ideal wave 4 target. So, and boom, here we are. So we can now update this chart. This is wave 3. There, I'm going to take these two away. And then we had here wave C. Was it correct? Yes, it was correct. I didn't know, of course, until it was confirmed. And again, it was unable to close below 45.39. So now we're in this wave 5, ideal 46.30, 46.50. Can always extend, right? Extensions, I cannot foresee. That is the problem. People that think that Elliott Wave doesn't work. Well, GFY, of course it works. That's this beauty. This was already a low risk buying opportunity because we set the risk below 45.24. It's 44.87, 43.91. None of it was ever hit. Picture perfect. This was just a perfect environment for buying a couple of calls. Now we'll have to see what we're going to do, if we can reach it or not. I have not put in any wave labels yet. I still think we can reach these upside targets. Okay. So from a daily chart perspective, again, this looks much better as a larger fifth wave that's barely subdivided. So wave 3 is in there. Then we had a irregular flat wave 4. So this was then wave 3, fell a little bit short for the wave 4 target zone. nailed pretty much the wave 5 target. So there we go. So this is then wave 3. Can even put 3 there and 4 here. I couldn't care much about it. It's a little bit potato. Then of course we have our A wave here. Yesterday's high was wave B here. And then of course wave C was at yesterday's low. And we're now at wave 5. And as you can see here, we have 46.47 as a next Fibonacci upside target. Okay, so I don't think this is a second wave anymore. This is a barely subdividing fifth wave. 1, 2, 3, 4, 5. Okay, also here, the negative divergence on at least the RSI5 seems to be erased. Still have it, of course, on the MACD, and the money flow is also not supporting this move higher. So again, 46.30, 46.50, potentially 40. Oh, sorry, it's not 4700. My bad. 46.47, right smack in the dip. Dibble, double, middle. Picture perfect. All right, picture perfect. So I'm going to put that in the hourly chart right there. Right? Horizontal line, 46.47. All right, there. Boom. 138.20% is 46.47. Not too bad. Wonderful. All right, wonderful. I think we're going to get there. That is my gut feeling. As long as we hold, of course, above yesterday's low, we can get there. Okay, so we're getting close. Can it go to 4,800? Yes, it can. Doesn't have to stall here, but I think we're getting pretty stretched, and we have some turn dates coming up. So this was one of the charts I presented to you based on the idea of a ending diagonal fifth wave. Ending diagonal fifth waves are rather common. But with this continued move higher, this potential, I think, is now erased. A lot of people have been looking for the second wave. It's just not happening. Well, after 3 weeks not happening, let's then just throw this one out the window. Again, it was a potential, and a potential means it is possible. It doesn't have to happen. And in this case, it's not happening. Instead, again, this looks like a straight up fifth wave, similar to what we had here, again, as I showed you in late 2021, just straight up, okay, and we started to see some divergences. Again, the money flow is definitely not confirming these higher prices. As you can see, we're right here now in this ideal C wave target zone. Okay, we're right there. So the ideal is 47.47. Ooh, we're getting close, getting close. Okay, 47.47. Where else did I see that? 46, 47, 47.89. So we're getting awfully close. So this one's off the table. Awfully close. So this is the potential for this B wave. And then we're back here to resistance in late 2021, resistance here in early 2022. We're right back at it. Wouldn't surprise me for a B wave to do so. I can go back to the primary wave 4 that was taking all of the 1960s pretty much into the early 1970s, where the first B wave also did almost a 90% retrace of the initial A wave. Okay, and then we saw another 40% correction. So I still think we're in a similar type of environment. So we're getting close, right? And from there, we'll get then our C wave. I still don't think this is going to happen. Why not? It's going to be if this is the case, we're already too far on this wave 1. It's too far. I don't see it. To fit this in for this 5 waves higher as a ending diagonal fifth wave of a C wave of a B wave. So I think we're just going to go boom, straight up. That wouldn't surprise me. The alternative is we're not even going to go to 47.47. We're not even going to stop at 48.01. Well, we're going to go there, but we're not going to stop there. We're going to rally all the way to 5,034. Is it possible? For sure, it's possible. But even that one, I cannot even make 5 waves higher. So we're going to stall here at around, what is it, 46.40, somewhere there. We need to see then a massive second wave, because let's say we have about a 50% retrace somewhere there for the second wave, right? Somewhere there, and then you can see it. This is going to go to well over 5,000, and I just don't see it. So we could just go straight up all the way to 5,000. All right, I cannot say it's not going to happen. Then we have a very extended fifth of a fifth wave. It's possible, Okay, that's why we say you need to hold certain price levels. Okay, but again, the ending diagonal, nah, I don't like it. It's the potentials off the table. It looks better here for this fifth wave, 47, 47. Wouldn't surprise me at all. We won't get 4,800 and we won't get 5,000. Everybody's looking for it, we won't get it. If that's the consensus, the market's not the time, the market's not going to give it. Well, that's a little bit more of an opinion, of course, but please keep it in mind. Here's the IWM. I'm glad I showed yesterday this triangle because the breakout yesterday was a good trade trigger. Okay, boom. I still think we can now reach 188, 189 for this larger C of 2. This still doesn't look like an impulse to me. I have a hard time counting this as an impulse. This looks maybe I need to revise the labels A, B, something like that. That we are already a little bit further along, and then this is all going to be revised a little bit. It's always the initial labeling is a little bit hard. We don't just know exactly what the labels is. That's fine. So then this is B, and then we are now in this wave C. Okay. So we're 3 waves lower. I don't know why I deleted that, which are then also 1 degree higher. It's all good. We got the breakout, and then let's see if we can get some nice Fibonacci work. There was wave B, and there you go. This will then be our wave C. Okay, I think I like this one better. I like it better this way. So we got our technical breakout. We held, of course, the 177. Wonderful. So we should now be in this wave C. And as you can see, the width of the triangle targets that's almost perfectly. Okay, so let's go for that one. And how much of a retrace are we then seeing? I think that's about a 76.4% retrace. I'm going to do the reverse here. There you go. 23.6 is the opposite of 76.4 if we subtract it with, of course, 100%. Boom, I like it, right? Let's keep it as is. Let's keep it as is. This is going to be fantastic. Absolutely fantastic. So we'll take this one off. And I was unfortunately off by 1 wave degree. Pardon me, sometimes it's a little hard to know exactly, but I think we can get there. I think we can get to about 190 for this wave 2. I'll keep it as is, okay? I think this looks really good. I like it. I like it a lot, as we say in Dumb and Dumber. All right, covered that one. Looks great. Let's aim for 190s. Wonderful. Still doesn't look like an impulse to me. Moving on to market breadth. What does market breadth has to say? Well, we're still only less than 50%. It's increasing. I have no decreases, but please be aware of this potential negative divergence developing over time. Okay, we still have not made a new bullish percent high, whereas we're pretty much at new highs. Okay, so this is now setting up similar to what we saw here in 21 into 22, or 20 into 21, sorry. How we're doing on the bullish percent index for the S&P 500. Well, remember the other day I said if we go above 70, we're going to get some alarms going off. And we're getting close already. So this one matches and fits the bill as well. I don't know where it's going to top, but again, it is screaming, no, take some profits, raise some stops, all that stuff. We're still looking higher. I think that's the predominant path. AD line has still not made a new uptrend high, still not made a new all-time high. So we remain of the notion that this is still a bear market rally. How we're doing on new lows? Well, short term, we're good on the NYSE. 21, still a little bit too high on the NASDAQ 100. That one has pretty much not been below 50 since pretty much forever, right? You can see here, we've only gone here below 50 in 2023, maybe here in July, but that was closer to a top than anything else. So this is still not looking too healthy. New lows is very critical. I also wanted to share, once again, I've shared it before, the ratio between the percentage of stocks above 50 divided by that above 200. All bull markets since 2002 were hallmarked with a rally above 1.75. We're still not above 1.75. That means no bull market. There is no bull market based on this indicator unless it's now completely wrong. every single bull market, even a bear market rally of 1.75. So it's not a strong rally from that sense. Well, I only have 10 minutes left, so I'll have to stop yapping pretty soon. Again, very strong market breadth. 90% of all stocks are increasing. That's really good. But of course, it means that we continue to be flooding hard, and we continue to say that eventually the flood will turn into a ebb. Nothing goes up forever. Okay, it just doesn't. As you can see here, there are some instances where we're getting very close to a market top, as you can see. But again, we have not broken any price levels to the downside, and those are the ones we trade on. But again, very close to a top. Okay, back here, very close to a top. Back here, very close to a top. We're getting extremely overbought. Please keep it in mind. Don't get caught up in the hype du jour. Okay, please make sure you take the profits along the way. This one hasn't updated since, but again, this one is of course also maxed out. Can stay maxed out for a while, right? That doesn't mean, but again, the lower risk buying opportunity was of course here in October, November, not so much here. This should be constrained to shorter term trades, in my humble opinion. Fear greed, pretty high. We are at 67. I want to see extreme greed, somewhere around 75 plus. We're getting close. Okay. AAII, as I shared yesterday, oh my God, almost 50% bulls and barely a bear left. I would like to see what's going to be next week. Then let's move on to the National Association of Active Investment Managers, 81% allocation to the stock market. We're getting close to a market top if this is still correct. Seasonality. If we look at regular seasonality, okay, again, we should see a top somewhere November 7th. Discussed before, this has not been the most accurate of market timers and trends, but still looks pretty good for a top year. December 7, 8, somewhere around there. If we only look at election years, this is the S&P 500, by the way, and then we're also looking for a top somewhere around December 7, a drop and then a rally. Well, it's possible, doesn't have to happen. And then last but not least, I want to share again work from Olga Morales, where she's looking for the last turn date on December 10th. Matches pretty well, 7, 8, 9, right? 7, 8, 9, 10, matches pretty well. So that means we should top out somewhere later next week. I wouldn't be surprised, right? Mid to late next week, we might top out. So please keep that in mind. We're not there yet. So I have almost 5 minutes left. That sums up our presentation for today. I think we have covered every single angle there is, from the short term to the long term. We have covered which price levels need to hold. I still think we can go a little bit higher. I want to see that very well-defined fifth wave, especially on the S&P 500, NASDAQ 100. The Dow Jones just keeps blowing higher. It's unbelievable. This is something I didn't anticipate, but again, we've not gone below 35,275. And this is also why I recommend, for example, using my ETF trading system, because there is no insights. It's pure price-based, and that one has been long for quite a while now, the ETF trading system, right? So the UDOW that we've been long since November 10. We've been long here, the Dow Jones, since November 10. With only 1 quarter left, and all we do now is raise stops, okay? This is amazing. We don't have to do any analysis. This is simple, mechanical, closing price-based trading. We're long since here. I wonder how many people have done that. I really wonder. Very few. So please keep that in mind, that we can have some wonderful trades by just following price and don't have to listen to anything. Can be a fantastic supplement to your trading. This is amazing gains already over the last 2 days. And again, we've been raising stops. So if we're going to get stopped out, we only have 0.25% left, of 25% left, a quarter from our original position on the Dow. We're not long short-term. The technology sector is still long. The S&P 500, not long the semiconductors. We just went long the Russell again, of course, on that breakout. Okay, just to show you that it can be hugely complement to your trading. We also want to make money. And if you can't make $100 a month, pay for it. You shouldn't be in the markets in the first place. That's my honest opinion. Take care. Trade safe. Catch you all next week. Let's see how we're going to do, if we're really going to get that turn later next week and turn everybody bullish, even the most bearish people. Have a great weekend. Bye.